already have your decisions. Now you can test if you can be profitable with your strategy, and also assuming your different levels of performance in the target market. This is what we call the break-even analysis. In that case, your objective is try to figure out how much customers you need to achieve and how much they need to spend with your products to become profitable. Of course, this is just a guess because you don't really know what will be the performance and the acceptance of your products in the target market. But at least you can try some different assumptions to see what will be the level of performance required to let you achieve a profitable operation in the target market. So let's start with this analysis. First, you need to use this approach just to aid your support and decision making. And this is really important. It's just a support. It's not something that will really happen in the target market. And to make this assumption, you can test two different numbers. That is basically what will be the market penetration of your products. That is the percentage of people in the target market that will use your products. And also you need to estimate or guess what will be your average revenue per user. Basically, how much in average each customer will spend, will buy or of your products in the first year of operation. Indeed, in the real simulation, and it's the same mechanism that we are using here, your market revenues is basically the multiplication of the number of people living in the country, the population in the country, the market penetration of your business, and the average revenue per user. So the population multiplied by the market penetration is basically the number of customers buying at least once your product in a year. If you multiply that by the average revenue that each customer is expanding with your products, then you're going to have your market revenues. In that case, we have different levels to make these tests. And if you choose very low levels of market penetration, you're basically assuming a very pessimistic approach. And if you choose more high levels of market penetration, you're assuming a very optimistic approach. And the same for the average revenue per user. You know that these numbers are based on the previous experience in your business. Let's say that in your home country, after a lot of years, now you have like 1% of market penetration and 100 reais per $100 per year per each customer that is buying your product. So we may assume that the very optimistic approach is like what you believe that you can achieve in the best conditions. Basically, you're going to have a target market like your home country, just in the first year. In the other options, like in the opposite, we can say that this approach is what other brands similar than you had achieved in other countries, where they usually bankrupt or close their operations. Probably if you achieve a number like that, it will be very hard for you to be profitable in the target market. So let's give one example. Suppose that a company will enter in Brazil with this size of population, and we are expecting to achieve 0.3% of the population. This will be the market penetration. And I believe that the average revenue per user will be something in the likely scenario like $50 per customer. So the expected market revenue will be this number here. We need to check what will be the levels that you need to achieve here to become profitable in each of these dimensions. You can go to the tab Estimated Outputs and test different options to see if you can be profitable with this strategy in this target market. Let me explain to you this tab in the Excel file. When you enter here in the Estimated Outputs, you can change the values of market penetration and average revenue per user to see your potential results. So let's start with the likely scenario. In that case, we have here 0.5% of the population buying our products, and the average expense per user, or average revenue per user, of $50 per customer. So, given that I'm entering here in United Kingdom, what would be the number of customers in that scenario? First, if you multiply this value, this percentage, by the size of population, you're going to have the number of customers. So if you achieve 0.5% of market penetration, then you're going to have 325,000 customers in the target market. And what will be your market revenues? Basically, you need to multiply this number of customers by the average revenue per user. Okay, so here you'll be able to see the cost and financial estimates of your business. If you're dealing with your actual decision, so your market revenues will be $16 million if you have this average revenue per user, and this is the number of customers. And since you don't have any intermediary like a franchising or exporter, all of these market revenues will become your company revenues. In that case, your fixed cost will be this amount, and the variable costs for selling our products will be this amount. So the total cost of your products is basically the sum of these two. The gross profit is basically your company revenues less the fixed and variable costs. So after paying with this money, you still need to pay for other costs that you have in your business, especially the costs related to your marketing decisions. Also, we have here your percentage margin, meaning that 73% of your company revenues will become gross profit for your business. And also, you need to subtract from your gross profit the cost of other decisions. And then we have this measure of profit that is named EBITDA, the earnings before interest, tariffs, depreciation, and amortization. This is a very famous measure of profit for different business. So as you have here your gross profit less the other costs, this is basically your operational profit, or EBITDA. And also, after the EBITDA, you need to pay taxes. So this is the amount of taxes taking into account your business model selected. And also, your net profit is the difference between these two. And if you have partners, for instance, in my example, I'm using joint venture. So indeed, half of this profit will be profit for my partner. So in the end, I will receive this amount of money as my profit. Okay, so what you can do now? You can try different assumptions and see how these assumptions will affect your profit. For instance, now I'm using the likely scenario, but let's be a little bit pessimistic. So what will happen if I achieve a really low value in both measures? 0.10% of market penetration and $10 in average per each customer. So in that case, I'm going to lose $1.3 million in my net profit. And let's look in the other side. If I go to 1% of market penetration and, for instance, $100 of average revenue per user, in that case, I'm going to have amazing net profit for my business. And of course, I'm taking two, this is a really optimistic scenario, so I don't believe that I'm going to have it. For instance, I may believe that I can achieve like 20% of what I'm achieving in France in the first year in the target market. This will lead me to 0.2% of market penetration. And since now my customers are spending something like $100 per year, I may believe that since we have a similar country, and I believe that I can achieve something like 60. And for instance, in this example, I still can be profitable. And I can look, for instance, if I reduce that, if I'm going to lose money. And for instance, if I get this amount of money, now I start losing money. So if I have less than $30 with 0.2% of market penetration, then I'm going to lose money. But also I can change my decisions. For instance, let's give an example. I'm using here the multinational agency. I can try to see what will be my result with a local agency. So what will happen if I choose a local agency? So if I choose the local agency, my cost will be really low compared to the multinational agency, and I can be profitable even with this approach. But of course, if I believe that I can achieve 0.2% of the market with a multinational agency with $30 per customer with this huge and really successful agency, probably I need to reduce a little bit my estimates here, since I'm not going to have the same performance with just a local agency. For instance, I can say that my average revenue will be like that, and I still can have some small profit even that way. For instance, look into these numbers. It seems to be fairly um, it seems to be reasonable to achieve some profit with my strategy. But I also can change other options. For instance, let's look my input decisions. Now I'm going to change from a skimming approach to a penetration pricing. And also I will change from a selective distribution to an intensive distribution. As you can see, now I'm trying to have low prices and achieve the entire country with my strategy. In that case, one thing that can happen here, for instance, my market penetration probably will be higher. I can achieve, for instance, 0.8%. But for sure, customers will expand, the average revenue per user will be lower because now I'm targeting the mass market, not only wealthy people. In that case, I will need to reduce, for instance, here my average revenue per user. And with this strategy, if I can achieve this amount of the population and they are spending this amount of money, then I can have some good profit here. So you may change some of these strategies. For instance, let's go again. Let's go to the green field. Okay, the green field. And now I'm going to have a factory there and have everything by myself and also increase my budget. So if I'm having a factory there, the major effect is that I'm going to have lower penetration, but I'm trying to lower penetration because I don't know the local market. I can lose some intimacy with the customer, but at the same time, I'm spending more money in marketing. So this can mean that I can create a trade-off between the previous decision on the joint venture. So let me say that with this strategy, I will still be able to achieve 0.6%. And let me say, let's keep with $10 per customer. In this strategy, I will still have this amount of profit. And basically, you're going to see that I'm not going to have to share my products, but the cost of making this decision, the greenfield decision, increased my cost. So this is it. You need to test different options and see which one will fit better to your strategy, to your thoughts about the country that you're entering. And then once you have your decisions, you are confident with the decision, then you can go online and send it. And for these, as I told you, you need to test different assumptions. You need to test and change your assumptions. So each time you change your decision, change the market penetration, the average revenue per user, try to figure out what will be the impacts of your strategy. And let's think that was a real life. You need to present your strategies and present your assumptions for the market revenues, for instance, based on the average revenue per user and the market penetration. And then we need to be able um, to say that this is the right decision, that these numbers, you can achieve that, and this will become a goal for your business unit. So basically, you need to be able to defend your position and say that this is what you expect for the market. And since you're changing that and you're confident with a specific decision, then you'll be able to end and send your decision. For doing that, you're going to use this online link here. Basically, you just need to click in this online link, or you can use this QR code and enter the information and send it. Let's show how you can do that. So once you have the link, you just need to click here in the online link, and then you go to this online form. So first of all, you need to enter here your institutional email. For instance, I can use this email here to represent my, then I'll be able to receive a copy of my decisions and as a receipt of my activity. And also you need to type your full name just to identify yourself, select your course, and then you enter your decision. In that case, I'm going to click here and I'm going to select United Kingdom. Suppose that in the end I'm choosing Greenfield, and the communication I'm going to use promotion adaptation, pricing strategy, penetration pricing. I'm going to use intensive distribution, market sales expenses. I'm going to spend a lot of money on that, the maximum, and the type of agency will be local agency. So I just need to go here and click and send the answers. It's asking me to verify something. Okay, I'm going to verify. Okay, and then I sent my decision. You're going to receive a copy of your decisions in your email. And that's it for this decision. After sending your decision, then you need to wait a little bit, and then you're going to receive the report with your actual results and also some general feedback from the simulation for all the class and also for you. And that's it. See you in the results video. Bye.